Welcome, ladies, to the Real Estate Investor Show, providing inspiration, strategies, and insight to empower women investors to live balanced and financially free lives. Now, here are your co-hosts, Liz and Andresa.
So on today's episode, ladies, we have Mariyan Bahadarakhann. She is a mortgage broker. She's a real estate investor, and she gave us great wisdom around lending and obviously the mortgage industry. But most importantly, we talked about the importance of talking to brokers who take a holistic approach. And she gives some great examples on how to do that. We even get into creative financing and all the products that are out there to serve investors that many people don't even know about because we talk to traditional lenders. So really appreciate this interview, and you'll get some great golden nuggets on how you can position yourself early on. Right, Andresa?
Absolutely. Because it's the worst thing that you can do is to come to a lender when you just got a property under contract. So we share here step by step what we recommend you to do way prior of you getting a deal under contract.
Welcome back, ladies. This is Liz.
And this is Andresa.
Welcome back to the Real Estate Investor Show, where our mission is to empower women to live a financially free and balanced life. We do that through 2 episodes a week, right, Andresa? Mm-hmm. Published by Bigger Pockets. We do an interview style, and we also do a mini-sode. So we're excited to have Mariyan on today's show. We're going to be talking about mortgages. We're going to be talking about negotiating. We're going to be talking about really good stuff when it comes to the world of mortgages, which we all need to know in this game of real estate investing. So thanks for being on, Mariyan. Appreciate your time.
Thank you, guys. Yes.
Excited to get into Mariyan's story, and very powerful story, and her background in mortgages. Before we do that, we always like to get connected to all of you amazing women and men who listen to our show. We know there's a lot of guys out there that like our show. So thank you for listening.
Shout out to the allies.
Shout out to the allies of men. And they're like, we love your show. But we like to get connected to you. We like to share a very quick tip, story, something that you can bring into your day-to-day before we get into our wonderful guests. So Andresa, you're on the docket here to share something. So what is coming up for you, my friend?
I'm going to talk about blind spot, right? Because when we talk with different women and say, what is holding you back? And they usually say if there is money or time or knowledge, support. That's what they think it is. The truth is we do not know what is holding us back. That is our blind spot, because hear me out on this. If you knew that was the item that was holding you back, you'll be working on it. So it might not be. I encourage you to think about the possibility that money might not be what is truly holding you back. Time might not be the same thing, right? So the reason why I'm saying this to you is because, of course, I have blind spot. Liz has blind spots, and together I can see hers, she can see mine. And it's so important to be surrounded by a community of women that are not just vulnerable to share their experiences, but come to the table, come to play in the arena with you and support you within masterminds. And that's what our membership Strive is all about. We have successful women that are looking to scale, to build a team, to implement processes, and live life on their own terms, coming together live once a month to see each other's blind spot and support one another. Strive is much more than a mastermind. We have pod mentorship and accountability. Our alignment calls, because it's important for us that you are aligned to your values, to your goals, what you stand for. If you want to check more about Strive, click the link below. Our doors are open. If you did not hear about that, we're opening the doors today at InvestorCon. Liz and I are there as we speak right now. And we're opening the doors for our Strive membership. If you want to apply and get more information, click the link below on our show notes, and we'll see you there.
Awesome. Very excited about that. Such women doing deals, and they're making things happen together.
Yep.
So it's It's awesome stuff. Just come play in the arena with us to level up your investing. So very cool. Mariyan, without further ado, we like to jump into you and your story. And we always like to kind of ask the question, because I know you're focused on, you're an investor as well as, the work that you do, obviously, with mortgages. But what propelled you to get into what you're doing now with both investments as well as the mortgage industry, if you will? How did that find you?
Well, I'm sure like most people, right? I think setting a financial security is very, very important. Having, not just, relying on like my business, the mortgage industry, as you know, the last couple of years versus, today. So just having passive income, eventually working on financial freedom and just not relying on a general paycheck. I think that's so important to me. And that's how I kind of got into real estate and investment.
Wonderful. And you were born in a refugee camp.
Yes, I was. I was born in, Thailand, but we escaped, the refugee in Cambodia. So I think that kind of sets me, gave me the drive and the desire to want to succeed and build here. For sure.
Wow. And the reason why we say that, because I think that we bring a lot of grit with us, right? It is different. It's not just like, oh, you were born here and things were handled to you. And for the immigrants that can hear me right now, you know what I'm talking about, right? In the US, there is a quote unquote privilege that it's granted. It comes with it, right? You were born within, so it's normal. So for all the immigrants that are here that can hear it, there is a grit, that like a power within everybody that comes from other countries here, that many times we don't talk about. And I want
for sure. No, I think to add on to what you're saying, I mean, it's important to let people know that you don't have to come from something. You don't have to, you don't have to come from something or have anything in order to have a drive and do it. So that's very, very encouraging for other people that came with nothing, to want to succeed.
Yeah. And so walk us through, like, you're raised by a single mom. You had 6 other sisters, right? So seven girls.
7 girls. Yeah.
You're right. There's 3 of us in my family. There's 3 in Andresa's. That's double of the female energy. What was that like?
A lot of hormones.
I need to ask that. I don't know if I've ever I don't think we've ever interviewed someone who had 6 sisters. Tell us a little bit about that. Like that kind of, especially being raised by a mom who was kind of keeping everything together at the helm. Like, what was that like? What were some of those early, like, learned lessons that you brought into who you are today?
Well, definitely is a lot of estrogen in the household. And, we grew up very minimal too on top of that. So not only that we have, my mom and 7 girls growing up, but we grew up in a 1-bedroom apartment. So that's even worse, right? We're sharing like the cold showers, and sometimes my clothes were gone from the closet because we're practically the same size. So, you don't know who to blame. So it's just a lot of women running around, and you know how that is, right? You can only imagine. So double the size. So I think it gave me, it was pretty chaotic, I would say, but at the same time, it taught me resilient, right? I can work anywhere. I can, focus in a crazy environment. I think it's easy to focus, when things are easy and when things are quiet, but when you're dealing with chaos, how do you propel forward, right? Like people say it's easy to deal with, good things, but how about adversity? So I think it taught me resilience. It taught me how to just stay focused no matter what is going on around me. So That's very important.
And with the mortgage industry, right? When we think about mortgage, many times what we hear from women is that, okay, this is what I was quoted. I don't know if I can negotiate it or if this is what it is. Why should I, quote unquote, shop around? Is it all like a standard process? Shouldn't they follow a regulation? Or there's a lot of questions that women bring to the table when it comes down to mortgages. And on the information that we got from you, there are parts that are negotiable. So can we talk about that and make sure like all the women just grab like piece of paper and pen to take notes about this part?
Yeah, it's, of course, there are set guidelines in mortgage, right? Like you can't, I mean, across the board, you have your base interest rate and there's several variables and factors, things like general stuff like your credit score, right? And your, we call it debt to income ratio, what your debt is versus your income scenario is. And then, of course, there's the conforming loan amount in, what every county has like a limit. So, the loan to value, how much you're putting down, all that plays a role into figuring out your interest rate. That you can't really control. The guidelines are, by the feds. And so we as lenders, we have to follow that. Those are very important things. And we don't want to, mess with guidelines and legalities, right? But when it comes to negotiating, right, like rates, as a broker myself, people say, oh, it's set in stone, it's fixed. But, there's always something you can do, right? Women have to understand, like, can you buy down the rate or loan discount? How does that work? I think it's important to have somebody that can explain the difference for you. Like, are you willing to, for me, it's like, I rather pay a little bit more to get a discounted rate, especially right now, because rates are going up. I want to lock my rate, a 30-year fix. I want to lock it at 3% if I could, and then generate income as opposed to just, okay, like lock me at 4.5 or 5%. So I think that you can negotiate and understand that how much does it cost me, cost to buy down the rate. A lot of times it's 2-per-1 rate. You can pay a whole point and maybe lower your rate by half a point. So, people don't know that, but things are always negotiable, right? You can always negotiate. And it really comes down to what is your objective? Are you trying to cash flow, make income, or are you trying to save your income every month, and kind of work around that? So there is room to negotiate in the mortgage industry for sure. And then of course, there are things like, maybe someone has a credit score that they're right at the cusp and they don't know what to do to kind of increase the credit score. And that itself can raise, someone 1/8 or even 1/4 of a point. And you can you don't have to buy right now, but maybe in 30 days, we can pay off some debt, and increase your credit score. Maybe we can put down a little bit more, see your financial situation. So there are things that you can do to also adjust like your rate and negotiate in that manner as well.
Yeah, there's a few things I want to just talk through. I think what you're saying makes so much sense. I think so many times, so many people don't have an objective in their mind, right? They call companies, they call a mortgage company, they call just like, hey, I want to buy. And to your point, what are you really buying the property for? And what are the goals of the property are really important questions, because then everything else will you'll get answers from. So I love that point. Thinking about there's so many different mortgage companies, and not all of them may want to lend for investment properties. So, what are some of the things that women can glean from more of a, mortgage company that's more, I want to call it investor friendly, if you will, because there really are, I'm sure, so many different, and I've been in the business a long time, and not all of them want to lend. Well, legally they can't say who they can and can't, but it's pretty obvious they want to work with, first-time homeowners. It's just seems like that. And they make it very difficult, or they don't even have products necessarily for investors. So what are some of like the ways that women can vet mortgage companies to see, once they understand their objective, right? They want to buy that short-term rental, or they want to buy that small multi, and they can kind of ask those 3 key questions to that lender that they meet at a networking event to assess, are they going to be able to be the right team member for me and the type of properties I want to buy? What are some of those things that women can really zone in on, so we don't have to waste our time and talking to folks that, quite honestly, aren't going to be the best lender for us?
Right. And that's a very interesting point, because, when I first, got into the business, I talked to different people, men and women, to see, like my style, right? You kind of figure it out, but it's very important to, most people know somebody in the business, right? But first kind of, do your research, figure out if somebody had a good experience with somebody, and then maybe it's okay to interview the loan officer or the broker you're working with. I think it's important to have that relationship. Like for us, we're a boutique firm and we're service oriented. So if somebody calls, do you want to deal with a bigger company that maybe treat you like a number, or do you want to talk to somebody and see their follow-up skills and what concerns you have, and then address those issues, not so generally, but maybe focus on the specifics and try to work with you on your goals, as opposed to, oh, you want to buy a house, you want to get a mortgage, let me just get this done for you, right? So I think interviewing somebody is very important. And then, like we do creative financing. To answer your question, there are a lot of loan programs out there. There's conventional loans that people aren't able to get, right? If you don't have a W-2 or you're not a traditional employee, then you might want to assess, okay, what is my next option? Like we do creative financing. So we have programs like bank statement loans, we have equity lending loans, and then we have, just asset, type of loans. So if someone's income rich but asset poor, maybe they can get qualified traditionally, or if they have a tight income because their debt's so high, then they can look into maybe like a bank statement program. And, it's very important to interview somebody and see, hey, this is what I want to do. I want to invest. But, I don't have this and this and this. And maybe the person they're interviewing can guide them through it. Like for me, if there's something, I hate taking no for an answer. So if I can't do something, then I'll try to go into my book of network and contact people that can at least help them. If I can't myself help the person, then I can at least understand the scenario and the challenges, and then go into my book of network and try to find somebody that can help them. So I think it's important to align with someone you work with, so talking to them, maybe asking for recommendations, and then doing research, and then interviewing, and then see if your goals align and see if you can work with the person and fit. I think that's so important because, you can start working with someone and then they can ghost you. I mean, that's often like most people's complaint. Like, I don't know, this person never gotten back to me, or I don't know where I stand, or here are the initial disclosures, but it's different than, the second disclosure or something. I feel misled. So I think, for us, honesty, integrity, being transparent and having the trust with clients are very, very important. So it's just like if you go into a relationship, right, you're going to ask them all these questions, or at least get to know them and interview them and see if you guys are aligned. So I think that's very important, to just feel the person out and see who you can talk to.
I when I was looking to purchase my latest primary, I think I talked to, no joke, about 8 different people, right? Because primary is different than investing. So I needed to talk to different people. It was a wild west. It seemed that I was like, every time that I was speaking with somebody, we were talking about a different scenario. And a couple of people looked at investors as, oh my gosh, high risk. I was like, I'm talking to the wrong person. We're not even talking the same language, I feel here. What else is there? So there wasn't a what else. What they were pushing basically was for a online application with bare minimal information about me. And I was like, you're not going to get that. We're going to have to run some scenarios here. I'm not just saying, oh, I cannot talk to you unless you apply and I run your credit. I was like, honey, that's not going to cut. Okay. So I know my credit. Let me give it to you. And we run the numbers first, and we do a mock or whatever it is. But I think that a lot of investors don't have the knowledge in different scenarios in order to have the confidence to come and say, let's evaluate. And they knock at doors of larger institutions where there isn't a creative financing aspect of it. If you don't have 2 years of your W-2, it's just like you're out. Right. So let's talk about, can we dive in a little bit more into the creative financing portion of it? Because I do believe a lot of investors are interested in that specific topic, because right now what we have going on in the market, and also a lot of investors that are self-employed, and their money, there are assets, right? But there are different scenarios. So the creative part, you mentioned 3 different types, right? The banking. Can we break that down in a little bit more about the different types based on the asset, the banking, and I forgot the third one?
Yes. So, well, obviously the traditional lending, that's normal, right? You have your W-2, your conventional FHA, all those normal. And I always recommend going traditional lending first, because you have the best interest rate. So for me, and then before I even go into that, to answer your question, there are a lot of people that want you to submit their application or documents before they can even give you the quote. And that's frustrating, I know, for a lot of people, right? But, most brokers or lenders that's in the business for a long time can gauge where you're at before they even collect your documents. Like as long as you have an idea what your credit score is,
Right.
what your general income is and what your debt, most people know that. If you're not, then you might not be financially ready to be investing, right? Because you should know this basic question, like, okay, I make like $5,000 a month. I have 2,000 in my debt, credit cards or payment. And then my credit score last time I checked, 30 days ago is 740. So you can piece or I have 5% down, you can piece the information. And as a broker, I can say, okay, well, you fall within this for traditional lending. You're trying to purchase the house and, I can quote them an estimated rate and then an estimated payment. I don't think that is hard. I think most people just want to gather documents because, once they have that, then they can kind of get you further, right, in the process, but doesn't always necessarily mean they're going to be the best for you. But so, with that being said, you have the traditional financing. So I always try to gauge, okay, if it's your primary home and you don't own a property yet, then let's try to put you in the best scenario or best loan option for you. If somebody takes your application or not know the information and want to put you in the highest risk loan, then that should be a red flag, right? Because those are high cost loans, right? You don't want to put somebody in there when they can qualify for traditional financing. So that's number one. And then number two, there's asset financing. I mean, that's very case by case a lot of times because we do deal with like private investors. So assets based on how much you have and how much liquidity you have and how much do you draw, from your financial investment every month that can compensate for your, income. And then we can qualify you based on the assets. And then, I kind of work with different lenders that are willing to take that type of program. And then you obviously have, which I really like the bank statement program because it's kind of almost a cusp between your traditional financing and then not so much like hard money because the rate's not as high as hard money loan, but it's still not as low as your traditional financing, but it's somewhere within the middle. And you still can buy down the rate. You can still, get the discounted points and then lower your rate if you want to. And that might be a smart option. And with the bank statement loans, we do 12, 24 month bank statements, right? And that is, for business owners. And actually, we've extended it to employees also that have, or, small business owners that have income generating every month. So if you're a service industry and or a retail industry and you're getting, deposits every single month, instead of using your tax returns, we can omit that. And your compensating factor would be using the bank statements to see what your average income is to qualify you. So we would say, if you make $10,000, $20,000 a month, but your average is 10, 20, 15, 10, 20, for 12 months, we'll average that. And we'll say, okay, this is the average income that this person makes based on the 12 month bank statements. And then we look at the debt and then we can just utilize that instead. And that program is great because most business owners on their tax returns will write off things, right? So your net profit doesn't really show as much. So when you're qualifying someone traditionally, you're looking at their gross income W-2, but when you're doing, a bank statement program for business owners, you're looking at their net if you're using their tax returns. A lot of times they cannot qualify. So to use the bank statements, you're in essence saying, okay, whatever your gross revenue is, we're going to take that. And then different lenders that we work with, we may automatically cut off 50% off the bat, and that's your debt. So 50% of whatever income you make on average is going to go towards your debt. And then we'll calculate your new, PITI, which is your principal interest, tax and insurance on your new mortgage. And that would also be included in your debt. They'll take 50% off the bat and qualify you with the remaining. Other investors, will have a different formula because especially if you're in a service industry, we know that your retail cost is not 50% off the bat. So like if you're a real estate agent, you're a tax person, whatever, you don't really have a lot of retail costs, right? Your service industry. So we might add more income back. So there's a different formula. Instead of taking 50% off the bat, we just take 25% off your debt ratio. So now you have a lot more gross income to qualify for. So what you couldn't qualify with your tax returns, you now can qualify because you have the bank statement. So, these are like alternative programs that are really good. And then of course we have like the fourth one, which I don't really like to promote and sell unless, okay, option A, B, C don't work, then we'll go to D, and D is you can't fit in the conventional, you can't do asset, you can't do bank statements. So then we go to hard money loan, right? And hard money loan is most of the time they're private investors. So I have a group of investors that might want to lend. If I can't fit them in a hard money lender, then I'll go into my private lenders that are willing to collateralize the property and loan them based on these specs. So, and then we'll go case by case. And it's a hit and miss because, if you have a good track record with an investor, right? Like if you're buying a lot of properties and you're getting loans from them, but you're paying on time, over time, you have that relationship. So then you can, maybe negotiate further too on your next property, your third property, and so forth. So I would say those are like generally the different types of lending and, creative as well too.
Yeah, I think that's
and then,
great.
Oh, I'm sorry. And then
Yeah,
of course, there's always the last thing with sellers financing, right? You can always do that too, but that's case by case. You can always negotiate your terms and move forward. So there is sellers financing too. So, there's so many different options. You don't want to just be like, I can't do it because I can't fit into one aspect or one category.
Yeah. And the fact that you have that many options is great. And I think that's something that women need to look for when they're talking to lenders. First off, I think the other really important thing that you're saying that is another way to vet mortgage lenders is they know the customer that they're serving. Like, the challenges of a business owner, right? As you were talking, you're like, well, you look at this, you look at that, you wouldn't do it. Like, your avatar. And I think that's so important, right? Finding the right lender is that they're working with people that, are like you, and may not like look perfect. I mean, there's obviously people who are part-time investing with their W-2 and they have W-2s, they're a little more traditional, but a lot of us are self-employed, right? And we don't have that W-2. And a lot of folks are like, whoa, versus, well, here's what we can do with you. I think that's great. And I think that's something to really look for in lenders, right? That there's options. My question to you is, does it make sense? What I'm hearing you say too, and I think this is great, is for people to call you before they have a deal, to call you before they have the project under contract, right? I mean, I don't know about you, but we have to move quickly now in this market. You always have to move quickly as an investor, but now more than ever, even with what's going on, it's still competitive. It's still a competitive market, small multi, large multi, whatever niche you're in. It's not like you're going to be the only offer. You might be, that's awesome. But I don't know a lot of women's experience like that right now. So you got to act quickly. In order to act quickly, you got to know all your options and know which product can work for that particular. So do you kind of suggest that to women, or not just to women, I'm sure to all people, but like that you kind of like run maybe some scenarios by lenders to kind of like vet them further to say, hey, these are the kind of projects I'm looking to get into. To your point, you can go down this path, we have this path, we have this path, and this path, even if they don't have a project under contract. Is that something you suggest?
I do. I like 100% recommend that, especially if time is of the essence, right? Like if you find, there's a deal waiting for you, you're not going to wait around. And most people don't. Most people should have a lot of the documents requested, right? Because a lot of it, that you can save it like electronically, right? Your W tax returns and all that stuff. So there is a difference to get like a pre-qual versus like an underwriting approval. So if somebody is like in a rush, we're not asking them for the full documents to get them, underwritten or approved, right, conditionally. We're just saying, hey, let me know here's the information they're going to give you to just give them a pre-qual. And of course, like we do pre-qual letters all the time. And I don't like to just put my name on a pre-qual letter if I don't at least see something, right? If you have a recent credit score, you don't want me to run your credit that's currently, I understand that you might be shopping. Give me a copy of, your Credit Karma. Let me see 3 of them and just show me your debt. And then your credit score, and maybe show me like a couple of pay stubs or something that I can look at so I can review it and then just pre-qualify you. And once I have everything, I can probably do it within an hour or two before we even have you fully apply and push you into the underwriting phase, right? Because if time is of the essence, you don't want to miss out on an opportunity. So you want to at least talk to somebody that can understand you and not just try to push you over, to go, full forward in order to even answer any of your questions. I think that's so important. That's why interviewing, feeling somebody out, getting recommendation, talking to someone over and over, a few people, and then figuring out, well, I like to communicate with this person because they're addressing my issue and my concern specifically. They're not like working around or trying to get more information before they give me this. And I can tell you right now, if you give me your scenario, I can most likely tell you if you can qualify or not. I forgot to mention, there are so many other things, like you can even use your Airbnb, your short-term income rental too, right? To get qualified. If you have a consistent 12 months history or something, like, so that's why it's so important to like just lay out your full financial picture. be like, hey, this is what I'm working with. These are my challenges. Like, what do you think is the best option for me? And I want to buy like this multi-unit or this primary resident, or this commercial property. What is the best option for me? So it's so important to get to the nitty gritty of your specific, goal.
I want to get into Airbnb for sure. And I know the women that are listening are like, let's go there. Mariyan, I do think that you being raised by a single mom and have 6 siblings, right? It allowed you to be extremely creative and work things out. Because that's exactly what you're doing now with all those loans. I want to go back to one thing that you said that's so important, right? The credit score. You mentioned Credit Karma, and I heard this before that. So there's mixed messages, right? Credit Karma, it's not accurate, or other people say, well, it saves as a guide. So as you were saying, would you recommend, let's say, I don't want my credit to be run by different lenders. If we had an account, if the investor is, and we are not affiliate to Credit Karma, so just letting everybody know here, we're not recommending. It's just a hypothesis, right? Just having
it's a free service. So.
It's a free, yeah, exactly, right? So there we go. Have a Credit Karma account so the person can have an idea of what it is and then share that with them, how accurate that is.
That is a really, really good question. And I know I mentioned Credit Karma. Of course, as a lender, we want their actual FICO, which we run ourselves, right? That's the true mortgage, credit scores that you can get. We have to run it. But I say Credit Karma because it is a good gauge for people that don't want to have inquiries, which, to be honest, if you are shopping for a mortgage within a few months, if you're running your credit within a few months, it is a softer inquiry. It's not like a traditional credit card, a hard inquiry. So as long as you're doing it back to back, you can justify, I'm shopping for a mortgage. It's when you're doing a mortgage this month, and then you're doing a mortgage run in the next 6 months, and it's so sporadic. The time difference, the time lapse is what really affects your score. But if you're doing within that time frame, it's okay. Now, if you don't want to do that, I say Credit Karma because you can sign up for Credit Karma for free. I mean, you can pay for their other service, but you can at least gauge. My biggest thing is looking at the debt that they, all the debts that they have on the credit score. And what I do, because I know that the credit score on Credit Karma is not necessarily like the FICO that we run, is I generally kind of ballpark it, right? So maybe with my experience, give and take, 15, 20 points. So I would say, okay, if somebody's at a 700 credit score on their Credit Karma, maybe I'll run a scenario or a rate based on 680 to 700, just so I can not misquote them. And I think it's very, very important as a lender to be transparent and let people know, hey, this is not 100% a true, quote. This is just an estimated quote. When I send out a letter or when I email somebody or I talk to somebody, I'm always like, hey, just so you know, this is estimated quote based on the information that I received, that I see visually in front of me, or at least told. And, if anything changes, then if the specs change, then I have to change the rate and quote. And then it's obviously based on the index. So whatever the market does, and your credit score and all these variables plus the market, that's going to also adjust and change. So it's very important to communicate that and not mislead people. And then the other option is, I tell people you get I think you get one free credit report, free annual credit report.gov every single year. There's no reason why you shouldn't be checking your credit, and you can pay for the score if you like to, but you get one free report from every single credit bureau every single year on the government website. So why not take advantage of that, right? So that also shows your debts, and if there's issues and then you need to fix, it's very important to track it and try to fix that before you go through the mortgage process. So and that's another option.
How often that is updated?
I mean, as far as your credit report, it should be updated whenever they report it. So when you have different credit cards, or loan or whatever on your credit, it should be reported it'll say on your credit report when it's reported. Generally it's 30 days or so, right?
30
I want to say
30
to 45
right?
days.
Yep.
Yeah. So if you're trying to fix your credit, I want to say, try to do it within 2 months, give it 45 days or so to fix it. If you want to pay off your debt or your balance, pay it off 45 days before you rerun your credit again. I try not to run the credit. That's why I try to look at the Credit Karma report first, and someone will tell me, well, I just paid off my mortgage. I just paid off this credit card last month. And if I don't see it reflected on their Credit Karma, then I'm like, well, maybe it's not a good time for me to run right now. Maybe we'll wait in 2 weeks, so because every time I re-pull it, they might get a little bit of a hit, even though it's not that drastic. Like I said, within that time frame, you still want to be cognizant of that as well.
Absolutely.
So
let's talk about Airbnb, right? Because a couple of years ago, Airbnb was like not even on the map of landing. Not that long time ago that things started changing and different types of products started coming to the plate. I remember when I started, we had to do a long-term rental for 1 year before we quote unquote converted to short-term rental. The income from the short-term rental was not accepted back in the day when I started. But what is the scenario now? Let's give everybody an update on it. Let's say I want to buy a short-term rental, right? So there's no income there. What are my options?
So I think a lot of lenders are still trying to position themselves how they want to look at Airbnb income, so on the back end, we always get updates and notifications, we're going to be accepting this soon. So I think there are still a lot of confusion with the lenders, and let alone I can see the general public have some sort of confusion. But what I would recommend is just like the bank statements, right? If you are depositing your income consistently, everything is based on consistency. If you can, because Airbnb give you the option of depositing, income into your account every single month, as long as you can track it. And then you get an end of year report of, how much you make just for your tax return. So I would say, as long as you have a consistent flow every single month, we can either utilize your bank account statement, or, you can get a document from Airbnb to show the consistent income. And then of course, how you file your tax returns and all that. I would say keep all the documents, show the consistency, and then the lender can look at that as a consistent income. Before it wasn't taken because, short-term is not always consistent. But I think the key here is showing like 12 months plus, 12 to 24 months of consistent income within that property being generated, short-term via Airbnb or, short-term vacation or whatever. Then you can show that to the lender, and then they can use that to average their income as well.
Are there other creative ways to kind of, embark on that? Because I'm also thinking about what's happening in the market, right? So like to get this wonderful short-term rental property that has all this consistent cash flow is harder right now in a sense of it's more like turnkey, meaning it is no value or there's no additional value that someone can add. And so much we talk about, right? Investing is taking something that's like, we had a woman we interviewed, took a single family home and converted it to like a 7-bedroom luxury short-term rental. She didn't have 12 months worth of kind of proof of the income because she created the value, right? She has it almost like moving forward. So what happens in those scenarios for the people who are converting, getting creative, adding value, which is really honestly where we make our money, right? As investors, they don't have that 12 months. It's more projected. Is there any other creative ways to I don't know, to bypass all that?
So if you're taking a single family primary resident into 7 units, then you're really going from residential to commercial, right? So because one of four units considered within, residential still. So if you go above that, then you have to now look at a lender that's willing to do commercial. So that's a good point, because there's construction, although like during COVID, a lot of those programs were frozen, but they're slowly coming back, construction, fix and flip, right? So you have programs with, they're almost like hard money lenders. They'll look at your, assets, your liquidity. So if you have like $1 million in the bank, they're willing to loan you up to a percentage for the development. So they can do like ground up development project or, with X amount down, depending on how much you have in the bank. That can be a shorter term loan, and that's based on projection too. So they'll do like an appraised value of what it's currently worth and what the projected appraised value would be once you develop the property. So that would be more like a construction type of loan. And, and that's shorter term, usually is 12, 24 months, but you can go that route. And then, again, we will look at the totality of the financial and see how much money you have in the account. What's your experience? A lot of times if you, maybe flip 2 properties a year and you show profit, then a lender can look at that as, okay, this person is experienced. They have, 100,000. A lot of times they'll loan up to 10 times the amount. They have 100,000 in the bank. We'll loan up to 10 times. We'll do a 90% loan to value. They have experience, and we'll hold the loan for 12, 24 months. And then they'll look at it like that. So the totality of financial, and then they'll qualify you based on flip. And then if you're going to change it to commercial, now we have to figure out, okay, has it been permitted? We'll deal with the contractors and then put you in the commercial type of program. So which is completely a different type of ball game than residential,
Well, and I think that's why the conversations have to be had prior to, to actually needing the loan. Like this is a couple, like even just throwing those scenarios out to someone that you're working with, especially someone who, like yourself, that can, navigate all these different, kind of areas and kind of be a resource. I think that's what I'm hearing is you're truly being a resource and saying, if I can't help you, and I think that's the kind of mortgage brokers, bankers, fill in the blank, but these are the kinds of people that really are going to be who the right team members are, right? They're a resource. They're not just a mortgage broker.
You have to really work backwards. Yeah, I was going to say, you have to really work backwards. You have to understand someone's story and then fit them, right? So if you go to, if you tell me your scenario, I located this property, but I don't have the money, I want to buy it. I want to build it, but this is how much money we have. Then we just have to understand what is the story, what you're looking for. And then, then place you and fit you in that particular program. So it's so important for people to be honest through the whole process, because, you don't want to say, I want to build 2 units. And then in the process, you build 4 units, because then everything gets out of whack and then you can't really move forward. And then now you're stuck, and then you're paying interest rate on the money borrowed, but that you're not really moving forward.
Which is not good.
So it's very
absolutely
important.
Yeah.
Exactly.
You said something also really important. Andresa and I talk a lot about partners and partnerships, especially as you scale or you're getting into some sort of new niche. And people always talk about, someone being potentially a private lender, or like they're going to, be the money partner, if you will. And that's how we built our business. Credit score, personally guaranteed. But you said something else that was really, really important. And I think I got a chance to understand the importance of this as we scaled into larger multifamily, was liquidity. That's really a very important piece of the puzzle as you scale and as you buy, and you shift and change. So if you don't have one thing, a lender's going to want to see that. And it just makes sense, not just the money you're going to put in the property, but actually what that liquidity is. And as we scaled into larger multi, that liquidity has just, gotten a lot larger of what, the general partner's liquidity is. When I was in small multi and doing those I'd never heard liquidity as much as we do now. So I just wanted to put a pin in that for the women listening, because we talk a lot about partnering in our community and with our members and all that good stuff, especially our Strive members. We talk about partner certainly on, money partners and credit score and all those pieces, but liquidity is also something that if you don't have, and you are looking to get creative, it is really helpful for a partner to have, because they are more bankable, right? There's more security.
Right.
They're less of a risk. So we don't always talk about that, Andresa and I, but I just wanted to put a pin in that, because I thought that was a great point. And it's something that I become so much more conscious of as we've scaled, because it becomes even more important. So.
Right. And, you have to, I always try to educate people, like you have to look at your position as a lender as well. Or even if you're borrowing money from your parent or family, right? You have to have the ability to repay the loan. So if you're tight in every aspect of your life, like if you're maximizing all your credit cards and you're maximizing all your loans and you're in debt in every left and right corner, they're going to look at you as a really high risk, because you don't have the ability to repay the loan. The more assets you have, the more money you have, the more, liquid you are, whether it's you or your partners, which I do recommend most people don't have it themselves. Don't stop because you can't do it yourself. Find a couple partners that are willing to do it for you. Even if you have the skill set, but your partner has the assets, right? You're trying to feed off of each other. So it's very important to look at it from a lender's perspective and they're not going to loan to me. I'm high risk. I don't have the ability to repay the loan. So I wouldn't even lend money to somebody else if they can't repay me back,
It's a great point, right? To even self-evaluate. And then as you get into these conversations with different lenders, how are they viewing me? And if I'm high risk, how do I reduce that, right? How do I mitigate that risk? We talk about that with properties, but we also need to do it with lending. So I love that thought. Exactly. Mariyan, this has been great. Appreciate your insight into this. I think a lot of people get very overwhelmed sometimes because there are so many options and choices, but I love your kind of holistic approach. And that's excellent. So where can the ladies listening learn more about you?
Of course, I have social media. You can go, find me, my Facebook, my full name, right? That long last name. And then also at Instagram at Mariyan Be Real, because, and then my website is MB Real Services. They can go there as well. And yeah, check it out. I mean, my name will redirect them there.
Awesome. All this information you guys can find on our show notes. Now we're going to transition to our fabulous 3 questions. And the first one is, Mariyan, what is the most transformational book you ever read?
Well, I kind of have 2. I mean, I really like, because I'm pretty spiritual. So I really like Don Miguel Ruiz, the 4 agreements and the 5th agreement. Yes, I really like that. The Toltec. I mean, I follow that wholeheartedly. And then I just recently reread Mark Manson, The Subtle Art of Not Giving a Fuck. I really like that book too, right? Because we all worry too much in this day and age. So it's good to kind of like focus your mind and get centered. So that's so important.
Wonderful. The second question is, what's the most powerful routine that you do to create a financially free and balanced life, whatever balance means to you?
Well, it's so important. Like I get out in nature like almost every single day. I think it's important to, like I run at the river or the ocean and do a little meditation to get my day going. I think through the calmness and meditation is where I kind of, get the information of what direction I want to focus myself and how do I want to grow. And, I give myself little goals, and like goals that I can accomplish and challenge, right? Like, I think it's very important to set goals that you can hold yourself accountable to, but not, a drastic goal that you're going to feel discouraged. So I think having some form of holistic approach, like meditation for me, or just being out in nature, to get my day going is very important. Yeah.
The last question is, which woman, famous or not, has inspired you the most?
Well, that's a no-brainer. I know everyone says their mother, right? But of course, in my situation, my mom is definitely my superwoman, superhero. Like, I don't think I've met any other woman that's like her, coming from, from a refugee camp. She was a slave for 16 years, coming here by herself and who knows, suffering all these traumas and then raising us and making sure all the women, like my sisters, are all driven and focused in their own right. So kudos to my mom. She's amazing. She's tough, but she has a good heart and she's kind of made us who we are.
What's mom's name?
I would call Mama Tina.
All right.
Mama T.
She sounds like an amazing woman,
Yes,
but Mariyan, thank you so much for being with us, sharing your wisdom with us, and really appreciate your time today. So thank you.
Thank you, Liz. Thank you, Andresa. Appreciate you guys. Good luck. Okay.
Thank you.
Thank you.
If you enjoyed this podcast and want to receive updates on our next interviews, go to our website, therealestateinvestor.com. There, you can subscribe to our show, become part of our investor community, and get updates on upcoming episodes.
If you like our show, please share it with other women who would benefit. And don't forget to leave us a rating on iTunes. We'd really appreciate it. And as always, we encourage you to take one action as a result of today's show and put it into motion so you can live both a financially free and balanced life. Thanks for spending time with us.
Ciao.